Good morning, everyone. I hope you're all doing good. Today, welcome to Addhyann. Today, we will be discussing about one good strategy which will be used for intraday within a time frame of 5 minutes. We are using a moving average concept to trade our intraday trades. The moving averages that we are using here are 20 period simple moving average and 50 period simple moving average. So these are the two moving averages we will be using for our intraday trades. The rules are pretty simple. Let me explain you the rules. The rule is, first rule for the buy entry is 20 period moving average should be above 50 period moving average. This is first important thing. So the green line is 20 period and 50 line is 50 period. So the first rule is you need to keep the stop loss. You need to use the buy entry only if the 20 period moving average is above the 50 period moving average. And second important thing is both should be rising up. Second point is both should be rising up. Second rule. First rule, 50 should be below 20 period moving average or should be on the top, and 50 period moving average should be at the bottom, and both should be rising. And third important thing is both should not be touching each other. Both should be like a parallel rising lines. If we have that scenario, it is a perfect scenario for us to take a buy entry. Now, you will be waiting for any candle to break out of 20 period moving average, and you will wait for a confirmation and then enter a buy entry. You can keep a stop loss below your 50 period moving average. Now you can see this is the breakout that I'm looking at. These are the breakouts but no confirmations. This is the breakout and the confirmation. So I will be entering at 33,720 and my stop loss would be 33,512. Around, you have around 200 point stop loss, and the target reach for the day is 200 nearby. Not 200, it is more than 200. It is around 250 points. So this is how the moving averages helped us to get our entry using the moving average concept and 5 minutes time frame. Let's see the second day. If you can see, this is not at all a good environment for us to use the 20 period or 50 period, because both are touching and both have a very a long space and not even a parallel scenario, and you can see it is crossing over and the market is falling. This is a completely this is a scenario where you should not enter into the trade using the moving averages. Let's get into the third day. So this is a favorable situation where the price, the 20 period and 50 period are parallel lines, and you got an entry and a confirmation, and you can enter at 34,208, and the stop loss will be little lower than 50 period moving average. So this will be your stop loss, and you can see you have reached around 160 points by end of the day. So this is how the third day we got a good entry and we made good profits using 50 period and 20 period moving average. Let's get into the fourth day. If you can see the fourth day, this is a very good scenario for us because these are parallel lines and not touching and rising. So the breakout and confirmation, and I would say the entry will be on this candle at 34,749, and the stop loss would be around a little lesser than the stop loss, or little below the stop loss, 15 period moving average, and you can see the price has raised up till almost 200 points and came down. And you can say if you are lucky enough, your stop loss wouldn't have hit, and you have reached around exactly 200 points. The stop loss is around 120 points, and the target is 200 points. This is how you can you could have made money in this particular scenario. Let's check in few other trades. On 5th day, if you can see, it was completely a disastrous day because both 20 and 50 are entangled with each other, and you don't even have a proper criteria to trade. So it was a no trading scenario with our setup. On 6th day, I would be interested in trading as the markets are raising up and they are trying to create a parallel pattern, so a breakout confirmation, and I would be happily entering at 35,354, and a stop loss would be around 100 points, and by end of the day it has reached 35,444. Around 100 points is where it has reached. Let's get into the next trade. This was a good scenario, the parallel lines and the price is dropping as well, so you would be entering at 35,300 and the stop loss would be 35,396, around 100 points. As you can see, the market has come down by 100 points, but unfortunately the stop loss is hit and then it has come down. So it was an unfortunate day for us. Let's see a few more trades. Next day, if you can see, it was a perfect day. I would say it was like the most favorable day for us. Breakout confirmation, your entry would be around 113.35, 113, and the stop loss would be around 280. That would be 20 around 150 points, I would say. And you can see the target has reached around 34,816, which is around 400 points, around 300 points, 300 to 350 points is what our target has been that particular day. Let's get into the few more trades. You can see this is a not a favorable condition because it is getting tangled, and you got an entry. After that, it has become parallel. So this is where I would be going with, because it is parallel and falling and the price. This is not the place where I would be entering. This is the place where I would be interested in. So the stop loss would be here. So the entry would be here and the stop loss would be here. Not a great day. We were at a break-even scenario. Let's get into a few more trades. It was a falling and a parallel day. I would be choosing to enter around this candle and confirmations. The entry would be at 34,585. The stop loss would be 34,674. But unfortunately, the stop loss got hit. Let's see a few more trades. This was the live trade that is running right now. As you can see, a parallel raising moving averages, breakout confirmation and entry. The stop loss would be below 50 moving average, around 200 points. It has already reached around 150, 170 points target. And let's see how this goes. So this is how you can use 20 period and 50 period for a trend moving trades, and it's going to work really well if you are focusing on a long run. Don't focus on a single day trades or 1 week trades. It should be long run and it will work really well. I hope you understood this simple concept of using 20 period and 50 period together to make some good intraday trend following trades. We will be getting back to you with few more techniques in intraday, and please be aware and please subscribe this channel and get more updates from Addhyann and learn the best possible price action techniques with us. We will be seeing you again with different strategies in intraday. Until then, have a great day. We'll see you again.